This is Scott Becker with the Becker Private Equity Podcast. We're thrilled today to be joined by Matt Wolf. Matt's a leader at RSM. Matt's one of our regular guests. He's one of the most listened to guests we have on the Becker Private Equity and Business Podcast. We talked to him really about trends he's watching in private equity. Matt, tell us what you're seeing in the private equity world right now. What's top of mind?
Yeah, thanks, Scott, for having me on as always. And as the kind of deal environment comes back, right, we're at this sort of confluence of factors that is breathing life back into the deal making environment, which is, we have a little more certainty on the future of the rate path environment. There's less volatility there. Lenders willing to kind of deploy more capital, given that visibility. I think sellers have also kind of, at least across some sectors, have kind of come to terms with the fact that they're going to have to sell at multiples that would not have appealed to them even 3 months ago, and that's leading to more deal making happening. However, and we've kind of alluded to this before, I think, but we're predicted this before on episodes, but now we're seeing this deals that are occurring. Diligence is taking longer. People are really turning over every rock to understand, investors, sponsors, to understand what exactly are they buying. And then the structuring of these deals, both from a purchase consideration and even just legal structuring, is becoming much more complex, right? As sponsors try to align incentives in a way that at least makes economic sense on a spreadsheet, right? So in terms of things like convertible notes and complex earnouts and contingent payments, rollover equity, like these things that existed in the prior environment have now become even more commonplace and in many cases even more complicated. And all of this kind of is adding cost and friction to the deal making process. So we are seeing deals get done. Sponsors have to deploy capital. They have to exit older positions in order to return capital back to their LPs so they can raise their next fund. But the deal making process is different. It's taking longer. Diligence is at a heightened level, and the way these deals are being put together is becoming much more complex, much more esoteric, and that is also kind of creating potential downstream issues post-acquisition for some of these companies. So it's exciting that deals are coming back, but it really is a new environment.
Matt, talk to us about the supply versus demand. Is it a buyer's market right now, a seller's market right now? How do you sort of view that pendulum of supply versus demand?
That's a really great question, and it's going to vary by sector, by industry, by even potentially geography, market, because the dynamics at play here is on the demand side for buying a business is, of course, sponsors have capital that they need to deploy. On the supply side, sponsors looking to sell those businesses is they have their return thresholds to meet, and they need to generate capital to return to their LPs, of course. In general, I would say that the dynamics tend to favor the buyers. However, the buyers know that they cannot deploy capital and purchase a bad business, right? They need to spend their time to make sure that it's the proper asset. So that's another distinction, right? We talk about quality assets versus maybe more troubled assets in terms of businesses. In general, I would say it's a bit more of a buyer's market, but there's really a lot of different dynamics that go into that. One thing I will point to that we talk about a lot that we try to track too is the rise of continuation funds, net asset value funds. These are sometimes ways that sponsors will try to stretch out their hold period, right? And so they can keep LPs happy, hold on to these assets. Those are sort of, in my view, at least kind of like a temporary fix, right? So the more we see of that, I think that's a little more indicative of buyers having more power, right? Because the the continuation funds won't work forever, right? So eventually there's going to have to be exits. There's going to have to be turnovers in these assets. And that will generally, in this environment, play to the buyer's favor.
So we'll start to see that even out at some point. But right now, the outlook for private equity investments looking up some. Interest rates hopefully starting to hit their peak and maybe start to move in the right direction. Inflation finally took a little bit of a breather this month, but still very high at 3.4% or so. And I guess we'll see how it goes. Matt, thank you so much for joining us again on the Becker Private Equity and Business Podcast. Always a pleasure to visit with you. Thank you very, very much.
Thank you, Scott.